Welcome to our exploration of foreign portfolio investors, or FPIs, and their crucial role in the Indian stock market. FPIs are key players here, comprising institutions or individuals based outside of India who invest in Indian securities. They bring in significant capital, enhancing liquidity and market depth, while also introducing global best practices and contributing to efficient price discovery. FPIs play a vital role in India's economic growth. For years, these investors have been drawn to India's growth story, viewing it as a lucrative investment destination with a vast consumer market. Their active participation has not only boosted the Indian stock market, but propelled it to new heights. Recognizing their importance, the Indian government has implemented various policies to attract FPI investments. However, recent trends suggest a shift in FPI sentiment. In May 2024, we witnessed a dramatic sell-off by FPIs in the Indian stock market, with over 28,000 crore rupees worth of Indian stocks sold off. This massive outflow has sent shockwaves through the market, raising concerns about the underlying reasons for this exodus. Several factors contribute to this sell-off. Global interest rate hikes and recessionary fears are making investors risk-averse, pulling their money out of emerging markets like India in search of safer havens. Geopolitical uncertainties, including the ongoing war in Europe, have further fueled the flight to safety. Additionally, the depreciation of the Indian rupee against the US dollar has impacted FPI returns, making them reconsider their exposure to India. The FPI sell-off has cast a shadow over Dalal Street, India's financial hub. The benchmark indices, Sensex and Nifty, have witnessed substantial declines. Trading floors are abuzz with discussions about the implications of this exodus, creating a palpable sense of uncertainty and anxiety. Market participants are trying to decipher the signals from FPIs. While some believe this is a short-term blip and expect FPIs to return once global uncertainties subside, others fear this could be the beginning of a prolonged withdrawal, potentially impacting India's growth trajectory. The sell-off has brought about volatility and corrections in stock valuations, prompting investors to reassess their portfolios and adopt a cautious approach. Section 4. Global Tremors, Connecting the Dots to International Financial Trends. The FPI exodus from India is not an isolated event. It is intricately linked to global financial trends. The US Federal Reserve's aggressive monetary tightening has led to a surge in US bond yields. This has made US assets more attractive, drawing capital away from emerging markets. Fears of a global recession are also pushing investors towards safer havens. The Russia-Ukraine war has created geopolitical instability and disrupted supply chains. This has put upward pressure on commodity prices, fueling inflation worldwide. The global economic outlook remains uncertain, making investors wary of riskier assets. The FPI sell-off in India is a reflection of these broader global financial trends. Section 5. Impact on the Indian economy, a long-term perspective. The FPI sell-off has immediate implications for the Indian stock market, but its long-term impact on the Indian economy remains to be seen. India's strong economic fundamentals, including robust domestic demand and a growing middle class, provide some cushion. However, continued FPI outflows could put pressure on the Indian rupee and impact foreign exchange reserves. The Indian government and policymakers are closely monitoring the situation. They are exploring measures to attract foreign investment and maintain economic stability. It is crucial for India to address FPI concerns and showcase its long-term growth potential. The government's policy decisions and its ability to navigate global headwinds will play a key role in determining the long-term impact on the Indian economy. Section 6. Conclusion. Navigating the uncertain waters. The FPI exodus from the Indian stock market is a concerning development. It highlights the interconnectedness of global financial markets and the vulnerability of emerging economies to external shocks. While India's economic fundamentals remain strong, the impact of this sell-off needs to be carefully assessed. The situation demands a measured and proactive response from policymakers. They must address the factors driving FPI decisions and restore confidence in the Indian market. By navigating these uncertain waters effectively, India can mitigate the risks and ensure its long-term economic prospects remain bright.